The town of Barnstable again earns a AAA bond rating from Standard & Poor's. We learn more about what a AAA bond rating means for the town on this episode of Barnstable Today. It's Wednesday, November 13th, 2013. I'm Sarah Mantle. This morning, Barnstable This Morning host Sarah Colvin talked with Finance Director Mark Milne about the AAA bond rating. We share that interview with you now.
Good morning, everyone, and welcome back to Barnstable This Morning. Just about 20 minutes toward the top of the hour on this Wednesday morning. I'm Sarah Colvin, and joining me live on the phone, I welcome our Director of Finance, Mark Milne. Mark, good morning.
Hi, good morning, Sarah.
How are you today?
A little cold.
I know, it is a little cold out there and snowy. Not quite ready for this kind of weather yet.
It's surprising, isn't it? Yeah,
it really
it's a beautiful weekend.
I know. I'm glad I got out and enjoyed some of the sunshine this weekend, though, and now I'm just not going to look outside until springtime.
Go hibernate.
Good luck with that. So, Mark, some good news from Standard & Poor's. Again, the town of Barnstable has been given a AAA bond rating. Can you talk to us a little bit about what this designation means?
Sure. We are actually going to the market today to sell $6,248,000 of new bonds for the town of Barnstable, and every bond that we sell must be rated for the investors' purposes, so that they can determine, what they want to bid on that bond. And so, Standard & Poor's rated this bond as well as all of our existing outstanding debt, and gave us a score once again of AAA. This means that we will most likely receive a very competitive bid or bids from multiple investors today. We'll share those results with you next week. So what this obviously is a very positive event for the town of Barnstable, so that we continue to enjoy very favorable interest rates on the debts or the bonds that we do issue to finance our capital program.
Absolutely. Mark, what does it mean to sell the bond? Just for those of us who may not be entrenched in the financial world, how does that whole process work, and why do we do it?
Yeah, in order to finance our capital program, because of the size of the expenditures, we don't necessarily have the cash on hand to pay for all of the costs associated with doing the construction. So just like you or I would do to go out, if we're going to buy a house, we have to go out and take a mortgage, so to speak, and that's what selling a bond is we're basically, mortgaging the cost of doing these capital improvements. And so we go out into the market. We normally do what's called a competitive bond sale as opposed to a negotiated one, because we'd like to have multiple investors bid on the issuance of those bonds in order to get the interest rate down. So it's like you or I going out to the mortgage market and calling several banks and saying, hey, what can I get for an interest rate on my mortgage? That's what we're doing with the bond here. We're looking for the most competitive interest rate on the bonds that we sell, and then we'll take the proceeds that we receive from that bond and use it to finance the construction costs of our capital program.
Great. So let's talk a little bit more about the AAA rating. Now, obviously, this isn't just something that Standard & Poor's takes a little bitty look at the finances and says, okay, you guys are good. There's a number of different things that they examine and that they rate us on to give us that AAA rating.
Yes, correct. They look at it, a year or a lot of trends. They look at our financial statements over multiple years. They look at our budgetary performance, and we scored very strong. They look at our economy, and in some of the categories that we scored very strong in are the economy, our budgetary flexibility, our liquidity, and our management practices and policies. In the area of the economy, they recognize that Barnstable is one of the major economic centers in southeastern Massachusetts. When you think about Barnstable, it's the hub of the Cape. I mean, it's the major has a major commercial base. We have over $1 billion worth of commercial property, which is one of the largest in the Commonwealth as well. And that economy services basically the entire Cape. When you think about the retail and the professional services that are centered here, particularly in Hyannis, it is a major economic center. So we score very strong in that category. We also have great deal of budgetary flexibility in that we have very strong reserve levels, and that's embedded in a lot of our policies and procedures that have been practices that have been adopted by management as well as the council. And our liquidity position is very strong too, meaning that we have a lot of cash available to meet our ongoing operating expenses.
Exactly, and certainly really shows not only the the economic strength of our town, but also the good management practices and the good budgeting. And obviously, one of the categories they look at is budgetary performance. How well are we meeting our goals? And certainly, it appears that over the past several years, we really have done a good job at meeting those budget goals.
Yeah, well, we're committed to preparing a sustainable, structurally balanced budget, and that is evidenced by our budgetary performance every year, and that we use surplus to balance the operating budget, but we've been generating a little bit more surplus than what we've used every year, which illustrates that we have a structurally balanced budget, and that's one of the things that they look at. If communities who continuously use the reserves and deplete those reserves in order to balance ongoing operating expenditures, tend to score lower in the bond ratings as a result of that type of budgetary practice. So it's one of the things that they always score us very strong on is our budgetary performance because of that.
Absolutely, and there's some indicators in here as well that make note of the slowly strengthening economy, and I think we've definitely noticed that over the past couple of years here in Barnstable, the effect of a stronger economy. I remember years ago we were definitely feeling the effects of a weakened economy, but it really seems like we're definitely on that comeback curve.
Yeah, well, we can one of the indicators of that is when we look at our hotel or our rooms tax and our meals tax. We've seen some growth in that over the past couple of years, and that's a good indication that our economy is chugging along in a positive direction because of the nature. Our major industry, of course, is the tourism industry, and so that's a pretty good indicator of where that industry is going. But we'll have to wait and see how that continues. With the Superstorm Sandy and what it did, to states that are a little bit south of us, I think we attracted a lot of visitors past couple of years who would have normally gone some of those more southerly locations. They came here instead because of we did not receive the type of damage that those communities did from Sandy, and so whether or not it's sustainable, we don't know yet, but we'll see. We're hoping that positive that we'll be able to continue attracting visitors, if not regionally. Maybe the international market will pick up again because it's not where it used to be, but maybe we'll see more of that.
Exactly. So just some final thoughts on this AAA rating. Just looking at the document you sent to me, we've got a affirmed AAA on long term and unenhanced, and there's a new one. Is that just because you're getting ready to go out to bid for these bonds?
Yeah, they rate the new issue, which is the one we're going out to bid today, and they rated that as AAA, and they rate all of our existing outstanding debt as well, and they rated that as AAA, and that's important because those bonds are actively traded on a regular basis, and so even the bonds that we currently have outstanding could be traded between investors, and if they have a AAA rating, they become more attractive and they're easier for an investor to sell if they wanted to sell them, for example. And so it's important that the existing bonds also receive a AAA rating. And one final note is the outlook that they've gave us is one that's called stable, and that means that they don't anticipate our rating to change for a couple of years. For at least a couple of years. Hopefully it doesn't change at all, but a stable outlook is the best outlook that you really want to get, because if you get an outlook that's negative, that means that the next time they rate you, you could see a drop in your rating. So, but a stable outlook is good.
Great. Well, Mark, thank you so much for joining us today. Always a pleasure to talk with you, and we'll talk with you again next Wednesday morning. Have a great day.
You too, Sarah. Thank you.
Bye-bye.